Based on the historical data and forecast, Bitcoin has shown volatility, with a recent upward trend but facing resistance at $64,400. The RSI consistently remains below 45, indicating that the asset is currently oversold and has potential for a rebound. The Bollinger Band suggests that the price is approaching the lower band, further reinforcing the oversold condition. Given this, I recommend a long position strategy targeting a potential upward move. We will enter a long position at $61,100, placing a stop-loss order at $60,000 to limit potential losses. The initial target price will be $63,700, aligning with the recent resistance level and forecast data. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI crosses above 30, consider adjusting the target price to $65,000. If the price touches the lower Bollinger Band, confirm the oversold condition and tighten the stop-loss to $60,500. The overall strategy aims to capitalize on the anticipated rebound from the oversold territory while managing risk through strategic stop-loss placement and adaptable target prices. This approach combines technical indicators with price action analysis for a balanced investment strategy. Based on the historical data and forecast, Ethereum shows a generally upward trend, although it has been fluctuating recently. The RSI consistently remains below 30, indicating an oversold condition. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential bounce. Considering these factors, I recommend a long position strategy focusing on capitalizing on the anticipated rebound. We will enter a long position at $1,620, placing a stop-loss order at $1,580 to limit potential losses. The initial target price will be $1,700, aiming to capture a moderate gain. To enhance returns and manage risk, we will implement a dynamic target price strategy based on the Bollinger Bands. If the price reaches $1,700, we will move the stop-loss to break even, effectively securing profits. Subsequently, if the price continues to rise and touches the upper Bollinger Band, which is currently around $1,970, we will take profits and close the position. This approach allows us to benefit from upward momentum while protecting against reversals. The portfolio will be 60% long position, 30% hedging, and 10% cash. Based on the historical data and forecast, BNB shows a downtrend with increasing selling pressure. The RSI consistently remains below 50, indicating a bearish momentum. The forecast for the next week predicts further decline, with prices potentially reaching $547. Considering these factors, I recommend a short position strategy. We will enter a short position at $580. The stop-loss will be set at $587 to protect against a potential upward reversal. The initial target price will be $578, aligning with the established support level. To refine the strategy, we'll incorporate the Bollinger Bands. When the price touches the upper band, it suggests an overbought condition, potentially signaling a pullback. Conversely, touching the lower band indicates an oversold condition, which might offer a temporary bounce. Combining this with the RSI, if the price falls to $562, we will tighten the stop-loss to $569 and set a target price of $555. This layered approach aims to maximize potential gains while minimizing risk, adapting to the dynamic market conditions. Based on the historical data and forecast, XRP shows a mixed trend with periods of consolidation and minor upward movement. The RSI consistently dips below 30, indicating oversold conditions, particularly on June 6, 10, 12, and 14. The Bollinger Band suggests periods of volatility with prices occasionally touching the lower band, indicating potential buying opportunities. Considering the forecast for the next week, the price is expected to fluctuate between $1.08 and $1.16. A combined strategy leveraging RSI and Bollinger Bands would be most efficient. We will implement a strategy that focuses on capitalizing on the oversold conditions and the expected upward movement. The strategy involves a series of short-term trades. First, enter a long position at $1.08 when the price touches the lower Bollinger Band and RSI is below 20. Set a stop-loss at $1.05 to protect against unexpected downside. Target a price of $1.16, aiming to capture the anticipated upward movement within the forecast range. Second, if the price reaches $1.16, take partial profits and move the stop loss to break even at $1.16 to secure gains. Third, if the RSI rises above 80, consider taking full profits and exiting the position. This dynamic approach allows for flexibility and maximizes potential returns while managing risk effectively. Based on the historical data and forecast, Solana demonstrates a generally upward trend, though with periods of consolidation. The RSI consistently remains below 30, indicating an oversold condition for a significant portion of the observed period. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential bounce. Considering this, I recommend a long position strategy. We will enter a long position when the RSI is below 20 and the price is near the bottom of the Bollinger Band. Specifically, we will enter a long position at $65.9. To manage risk, we will set a stop-loss order at $63.3, just below the support level. Our initial target price will be $69.7, aligning with recent resistance levels. To maximize potential returns, we will implement a trailing stop-loss strategy. Once the price reaches $69.7, we will move the stop-loss to $66.8. If the price continues to rise, we will adjust the stop-loss accordingly, always maintaining a buffer above the recent swing lows. The final target price will be $73.9, the previous resistance level. This strategy combines momentum indicators with support and resistance levels to capitalize on the anticipated upward trend while mitigating downside risk. This approach aims for high returns while incorporating risk management principles. Based on the historical data and forecast, TRON shows a slight upward trend. The RSI consistently hovers below 44, indicating the asset is not overbought. The recent dip to 30.2 on June 13 suggests a potential oversold condition. The Bollinger Bands have been narrowing, which could indicate a period of consolidation followed by a breakout. Given these factors, I recommend a long position. Entry price should be $0.324, with a stop-loss placed just below the support level at $0.322. The initial target price should be the resistance level of $0.33, aiming for a quick profit. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI falls below 20, indicating a strong oversold condition, consider entering a long position at $0.316 with a stop-loss at $0.314 and a target price of $0.328. Conversely, if the RSI exceeds 80, suggesting an overbought scenario, avoid entering a long position. If the price touches the lower Bollinger Band, enter a long position at $0.304, set a stop-loss at $0.302, and target $0.327. This layered approach provides multiple entry points and risk management levels, maximizing potential returns while minimizing downside exposure. Based on the historical data and forecast, Dogecoin shows a downtrend with increased volatility. The RSI consistently remains below 30, indicating an oversold condition. The Bollinger Bands are widening, suggesting potential price fluctuations. Considering these factors, I recommend a contrarian strategy focusing on short-term bounces. We will implement a tiered approach combining RSI, Bollinger Bands, and support/resistance levels. First, we'll initiate a long position when the RSI touches or falls below 20, aiming to capitalize on potential rebounds. Entry price will be $0.0788. A stop-loss order will be placed just below the bottom of the Bollinger Bands at $0.0773 to limit potential losses if the downtrend continues. The initial target price will be set at the center of the Bollinger Bands, $0.0878. If the price reaches this target, we'll move the stop-loss to break even and consider a second target at the resistance level of $0.0929. However, given the bearish forecast, a conservative approach is warranted, and we'll prioritize managing risk over aggressive profit-seeking. The overall portfolio will be 60% long positions and 40% cash. Based on the historical data and forecast, Zcash shows a volatile trend with recent upward momentum. The RSI consistently stays below 53.3, indicating that the asset is not currently overbought. The Bollinger Bands have been widening, suggesting increased volatility, and the price is currently near the lower band. Considering the forecast, the price is expected to decrease to $395 on June 26, 2026. Therefore, I recommend a contrarian strategy, anticipating a potential bounce from the support level of $411. I propose a long position with an entry price of $416 on June 20, 2026. Given the support level and the potential for a short-term bounce, a stop loss should be placed slightly below the support at $406. The initial target price should be set at $454, aiming for a quick profit. If the price continues to rise beyond $454, a trailing stop loss can be implemented to protect profits. However, if the price falls below $406, the position should be closed to minimize losses. This strategy leverages the anticipated rebound from the support level while managing risk with a defined stop loss and target price. Based on the historical data and forecast, Stellar shows a mixed trend with periods of both upward and downward movement. The RSI values fluctuate between 47.1 and 64.1, indicating neither consistently oversold nor overbought conditions. However, the recent RSI values are trending upwards, suggesting a potential shift towards a bullish momentum. Considering the support price of $0.202 and the resistance price of $0.224, and the forecast price for the next week, I recommend a long position entry at $0.214. We will set a stop-loss order at $0.202, just below the support level, to limit potential losses. The initial target price will be $0.224, aligning with the resistance level. To refine the strategy, we'll incorporate the Bollinger Bands. The price is currently near the center band, and the bands are narrowing, which could signal an impending breakout. If the price breaks above the upper Bollinger Band, we'll adjust the target price to $0.223, based on the forecast data. Conversely, if the price falls below the lower Bollinger Band, we'll reevaluate the position and potentially exit early. This combined RSI and Bollinger Bands approach offers a balanced strategy, capitalizing on potential upward momentum while managing risk with defined stop-loss and target levels. The portfolio will prioritize the combined strategy for optimal returns. Based on the historical data and forecast, Cardano shows a clear downtrend. The RSI consistently remains below 30, indicating oversold conditions, but failing to trigger a significant reversal. The Bollinger Bands are narrowing, suggesting decreasing volatility, and the forecast projects further price declines. Therefore, a short position strategy is recommended. We will enter a short position at $0.151 with a stop-loss placed just above the upper Bollinger Band at $0.158. The initial target price will be set at $0.136, aiming to capture a portion of the anticipated decline. To refine this strategy, we will implement a dynamic stop-loss and target adjustment. If the price retraces to $0.157, we will move the stop-loss to entry price $0.151 to protect profits. If the price reaches the target of $0.136, we will adjust the target to $0.143 to capitalize on further downward momentum. This adaptive approach combines the initial bearish outlook with risk management and profit-taking measures, maximizing potential returns while minimizing losses. Based on the historical data and forecast, Quant demonstrates an overall upward trend, supported by the consistently rising forecast prices. The RSI fluctuates between 36.6 and 53.2, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price is approaching the upper band, suggesting a potential for a pullback. Considering these factors, I recommend a long position strategy with an entry price of $71.4. A stop-loss should be set at $69.4, just below the recent low of the Bollinger Bands, to limit potential losses. The initial target price is $72.8, aligning with the forecast price for June 26, 2026. To refine the strategy, I will incorporate the RSI and Bollinger Bands signals. When the RSI dips below 36.6, indicating an oversold condition, we will enter a long position. Conversely, when the RSI exceeds 53.2, suggesting an overbought condition, we will consider taking profits or tightening our stop loss. The Bollinger Bands will act as dynamic support and resistance levels. If the price touches the lower band, it strengthens the buy signal. If the price reaches the upper band, we will adjust the target price to $72.7, capitalizing on the forecast. This adaptive approach combines trend analysis, momentum indicators, and volatility bands for optimized returns. Based on the historical data and forecast, PancakeSwap demonstrates a slight upward trend, fluctuating within a range between $1.35 and $1.4. The RSI consistently hovers around the mid-range, occasionally dipping below 50, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show periods of contraction and expansion, suggesting varying degrees of volatility. Considering these factors, I propose a moderately bullish strategy. We'll initiate a long position when the price touches the support level of $1.35. The stop loss will be set just below the support at $1.33 to mitigate potential losses. Our target price will be $1.41, aiming to capture a reasonable profit within the established resistance level. To refine this strategy, we'll incorporate the Bollinger Bands for confirmation. If the price approaches $1.35 and the lower Bollinger Band is also near this level, it suggests a potential bounce. The RSI reading at 35.3 on June 6, 2026, aligns with this scenario, indicating an oversold condition. Therefore, a buy order at $1.35, a stop loss at $1.33, and a target price of $1.41 is the most efficient portfolio. This combination leverages both momentum and volatility indicators for a balanced and potentially high-return investment. Based on the historical data and forecast, Virtual's protocol shows a slight upward trend with periods of volatility. The RSI consistently hovers around the oversold level of 30, indicating potential buying opportunities. The Bollinger Bands suggest that the price is currently near the lower band, implying a potential bounce back. The support price is stable at $0.542, while the resistance is at $0.642. Considering these factors, I recommend a long position strategy with a focus on capitalizing on potential rebounds. The entry price for this strategy will be $0.571, coinciding with the latest forecast price and the lower Bollinger Band. The stop loss will be set at $0.542, just below the established support level, to mitigate potential losses if the price continues to decline. The target price will be $0.642, aligning with the resistance level, aiming for a substantial profit. This strategy combines the RSI's oversold signal, the Bollinger Band's potential bounce, and the support/resistance levels to maximize potential returns while managing risk. Based on the historical data and forecast, POL-Xmatic exhibits a slight upward trend, fluctuating within the support price of $0.0722 and the resistance price of $0.0894. The RSI consistently remains below the oversold level of 20, indicating a lack of strong selling pressure. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential for a bounce. Considering these factors, I recommend a long position strategy. Specifically, enter a long position at $0.0764. Set a stop-loss order at $0.0722 to protect against a potential downside reversal. The initial target price should be $0.0796, aligning with the forecast price and the middle Bollinger Band. To maximize potential returns, I propose a dynamic target price adjustment. Once the price reaches $0.0796, move the stop loss to the entry price of $0.0764. If the price continues to rise, set the next target price at $0.0801. If the price reaches $0.0801, move the stop loss to $0.078. Finally, if the price reaches $0.0796, take partial profits and maintain a small position with a trailing stop-loss order just above the current high to capture any further upside potential. This portfolio combines RSI, Bollinger Bands, and support/resistance analysis for a robust and adaptable strategy. Based on the historical data and forecast, Zcash shows a volatile trend with recent upward momentum. The RSI consistently stays below 53.3, indicating that the asset is not currently overbought. The Bollinger Bands have been widening, suggesting increased volatility, and the price is currently near the lower band. Considering the forecast, the price is expected to decrease to $395 on June 26, 2026. Therefore, I recommend a contrarian strategy, anticipating a potential bounce from the support level of $411. I propose a long position with an entry price of $416 on June 20, 2026. Given the support level and the potential for a short-term bounce, a stop loss should be placed slightly below the support at $406. The initial target price should be set at $454, aiming for a quick profit. If the price continues to rise beyond $454, a trailing stop loss can be implemented to protect profits. However, if the price falls below $406, the position should be closed to minimize losses. This strategy leverages the anticipated rebound from the support level while managing risk with a defined stop loss and target price. Based on the historical data and forecast, Dash shows a fluctuating trend with a recent shift towards a sideways movement. The RSI consistently fluctuates around the 40 to 50 range, indicating neither strong overbought nor oversold conditions. However, the forecast data suggests a potential slight downward pressure in the short term. Considering these factors, I recommend a moderately conservative strategy. We will initiate a long position when the RSI dips below 35, indicating an oversold condition. Specifically, enter a long position at $34.6. To mitigate risk, set a stop-loss order at $33.7, just below the recent low. A reasonable target price would be $38.2, near the recent resistance level, offering a potential profit of $3.6. To further refine the strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, it reinforces the oversold signal and provides a stronger entry point. For the portfolio, I suggest allocating 60% of the capital to the RSI-based strategy and 40% to a strategy that capitalizes on the Bollinger Bands. The Bollinger Band strategy would involve entering a long position when the price touches the lower band and exiting when it reaches the upper band. This combined approach leverages both momentum and volatility indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Ethereum Classic has shown a general upward trend, although with significant volatility. The RSI consistently remained below 30 until June 19, 2026, indicating a strong oversold condition. The forecast for the next week suggests a price range between $7.22 and $7.36, with a slight upward bias. Considering these factors, I recommend a long position strategy focusing on capitalizing on the oversold condition and potential upward momentum. We will enter a long position at $7.22, placing a stop-loss order at $6.96, just below the established support level. The initial target price will be $7.41, aligning with the recent resistance level. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band, it confirms the oversold condition, strengthening our entry signal. If the price closes above the upper band, it suggests a potential overbought condition and a possible short-term reversal. Therefore, if the price reaches $7.36, we will adjust the target price to $7.63, leveraging the upward momentum. This combined RSI and Bollinger Bands approach offers a robust framework for maximizing potential returns while mitigating risk. The portfolio will be 60% allocated to the RSI strategy and 40% to the Bollinger Band strategy. Based on the historical data and forecast, Tezos shows a downtrend. The price has been fluctuating within a range of 0.231 to 0.245, but the recent forecast indicates a further decline towards 0.214. The RSI consistently remains below 30, suggesting an oversold condition, but not enough to signal a strong reversal. The Bollinger Bands are contracting, indicating decreasing volatility, and the price is nearing the lower band, which further supports the bearish outlook. Therefore, I recommend a short selling strategy with an entry price of $0.244. A stop loss should be placed above the recent resistance level at $0.245 to limit potential losses if the price unexpectedly reverses. The target price for this trade should be set at $0.227, aligning with the initial forecast and providing a reasonable profit margin. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI falls below 20, it signals an oversold condition, suggesting a potential bounce. However, given the overall downtrend, we'll use this as a confirmation for entering a short position. The bottom of the Bollinger Bands acts as a dynamic support level. If the price touches the lower band and the RSI is below 20, it's a strong indication to enter a short position at $0.244. The stop loss will be at $0.245 and the target will be $0.227. This combined approach balances the risk of a false signal with the potential for profit in a declining market. Based on the historical data and forecast, DeXe exhibits a declining trend. The RSI consistently fluctuates, indicating periods of overbought and oversold conditions, but generally remains below 80. The Bollinger Bands show a narrowing range recently, suggesting increased volatility. Considering the support price of $14.5 and the forecast price consistently below $16.7, a short position strategy is recommended. We will initiate a short position at $16.7 with a stop-loss order at $15.1, aiming to capitalize on the downward trend. The initial target price will be $14.5, aligning with the established support level. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. When the RSI reaches above 60, we will consider adjusting the target price to $15.5 to secure profits while the price is still favorable. If the price touches the bottom of the Bollinger Bands, we will tighten the stop loss to $15.8 to protect against potential rebounds. This combined approach of trend analysis, RSI, and Bollinger Bands will optimize risk-reward ratios and increase the likelihood of achieving high returns. Based on the historical data and forecast, Eigenlayer shows an overall upward trend, with recent price action testing the support level of $0.228. The RSI indicates that the asset is currently in a neutral to slightly overbought range, fluctuating between 36.5 and 64.9. Considering the forecast prices, which consistently predict increases from $0.212 to $0.239, I recommend a long position. The Bollinger Bands show that the price is approaching the upper band, suggesting potential resistance around $0.241. Therefore, I suggest entering a long position at $0.212 with a stop-loss placed just below the support level at $0.20. The initial target price should be set at $0.23, aligning with the forecast prices and the upper Bollinger Band. If the price reaches the target, we can reevaluate the situation and potentially set a new target towards the resistance level of $0.315, adjusting the stop-loss to protect profits. This strategy combines trend analysis, RSI signals, and Bollinger Band dynamics for a balanced approach to maximize potential returns while minimizing risk.